Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Now guys, nieces and nephews, fellow sheeps, followers of the price action, guys, we need to speak because there's a lot of uncertainty with the news, with this debt ceiling thing. They should be having the meeting right now. Hopefully we can get a deal going because the market is chopping after a $10 rally. Last week it's chopping. It bounced from 410 to 420-ish. Now we enter the chopping today, chop Friday. Far as the price action plan goes, the bull case and the bear case, it's the same thing. All right, I wasn't even going to make a video today because I didn't want to make a repetitive video, but it's pretty much the same thing. If you look on a smaller time frame, we had strong buying pressure from that 417.5 level, similar to Friday. And we had strong selling pressure from that 420-ish level, similar to Friday. Okay, so we got a chop range here, guys. 417.5 to 420. I do have 418.2 Fibonacci level in the middle of that zone. But we have a chop range. So as usual, when we're trading chops, remember, the goal is to be trappy. So watch out for false breakdowns and false breakouts. Those are some of the most trappy setups. Okay, so the market's chopping and is looking to be trappy. Play the trappy price action, okay? But usually when it's chopping in a range like this, I just look to scalp. So if we're still in the range tomorrow, 417.5 into the 420 zone, guys, look to scalp. The break of that range could give us a nice level to level or trendy move, okay? Obviously, I'm hoping for a trendy move. I'm hoping we can get this debt ceiling thing straightened out today. I don't know. They had a meeting. Will we get a deal going? Will we get progress? I don't know. But if we can, hopefully the market will make a decision tomorrow and we won't get another choppy day and we'll get some tradable moves. Now that we know what the plan is for the price action, okay? The range is 417.5 to 420. Watch for the break of the range. Above 420, we're going to look to long. Below 417.5, we're going to look to short and we're going to play it level to level. Above 420, I got 422, 423.5, and 425. Below 417.5, I have 416, 414, and 411-ish level. All right? Now, today's video, I want to talk about something to you guys because so many people's bearish or so many people's uncertain. All right? You know that I focus on the price action. All right? No matter what the news is, the price action is a reflection of the news. So if the market makers wants to push this down because of some bearish news, the price action will reflect that. If the market makers want to push it up because of some bullish news, then the price action will reflect that. If there is uncertainty, the pricing will also reflect that and chop like it did today. All right? So today, I want to talk to you guys about something. How do we know the bull market is back? All right? Now, I can't tell you for sure if the bull market is back, but I can show you the signs from a price action and technical analysis perspective. Check it out. I wrote this back on February 4th. All right, on my Discord. I call it Signs the Bull Market is Back. All conditions must be met. If not, the bull market isn't back. All right, so I'm going to go over these conditions with you guys. All right, condition 1, the clearing of the 23.6 Fibonacci level. All right, now how did I get these conditions? I looked back at multiple bear markets in the past. That's what I did. I looked back at multiple bear markets in the past. Okay? So I'm going to clear these Fibonacci levels that I got. I want the fib levels of the downtrend. All right? I want the fib level of the downtrend. The high was 479.98. I want to get the right number. The pivot high was 479.98. That was all-time high. And the pivot low was 348.11. That was October 2022 low. All right, so now we have our Fibonacci levels, and this is important because in condition 1, the clearing of the 23.6 Fibonacci level in previous bear markets, 2008, 2000, and so on, the clearing of the 23.6 Fibonacci level was the first sign that a bottom was in. All right, we cleared this Fibonacci level a few times, but it was a battle. But back on March 13th, we finally cleared it well. Well, we cleared it back in January. We back tested on March 13th as a support, and we got strong buying pressure since. The 23.6 fib level was 379.2. We cleared it. Condition 1 is met. Condition 2, the recapture of the 200 daily moving average. There is no such thing as a bull market that is below the 200 daily moving average. So if I bring up the 200 daily moving average, which is that purple line, we are above the 200 daily moving average. Condition 3, the golden cross. That's when the 50 daily moving average crosses above the 200. We got that way back in February, okay? Condition 4, I call this the stacked moving average. That's when we see all our moving average stacked on top of each other from the smallest moving average to the highest moving average, okay, from top to bottom. So if I bring up all my moving average, I got the 5, the 20, the 50, and the 200. You guys can see here that the 5 is above the 20 is above the 50, and the 50 is above the 200. We have stacking moving average, okay? Condition 4 is met. Now, condition 5, the recapture of the golden zone. In a downtrend where the Fibonacci starts at the pivot high and ends at the pivot low. To be bullish, the 38.2% to the 61.8% fib level must recapture and clear without breaking back down. So we need to clear the golden zone. The golden zone, based on fib level, is between 38.2 to the 61.8 fib level. Now you can see here, the 61.8 fib level is at 429.6. We cleared the 23.6. Okay, cool. We cleared the 38.2. Okay, cool. And we recently cleared the 50% fib level, which was at 414. We cleared this back on May 17th, last Wednesday, when we got that nice up move. Okay? The 61.8 fib level, the top of the golden zone, is at 429.6. Did we clear that level? Is condition 5 met? Yes or no? No. The answer is no. And like I said on here, all conditions must be met. If not, the bull market isn't back. Okay? Could the bull market be back? Probably. We are seeing 4 conditions met that the bull market is back. But all conditions have not been met. For all we know, remember, the retracement back to the golden zone is designed to fake us out, to think that the bull market is back. But once the golden zone is tested and starts rejecting, that's when a new low is coming. And I'm talking about a low that's lower than October's low. But the price action must confirm that. So what do I need to see? If price continues to bounce up and hit that 61.8 fib level, I need to see a hot stove rejection and breakdown of support. Another thing I need to see is a 414 level breaking down that support. It needs to break back down 414. That will be signs that the market is pulling back and going back down. When we start breaking down critical support levels, using these Fibonacci levels based on this bear trend that we have here will be a good guidance. Breaking back down 414, that's bearish, false breakout. If it was a break back below the 38.2 fib level, which is at 398.5, that would be bearish. Okay, because that would tell me that we tested the golden zone and we are getting selling pressure. So, for all the people that's been asking me, do I believe the bull market is back? No, all conditions have not been met yet. So right now, SPY is currently working on condition 5. All right? If we test 429.6, in my opinion, that would be a good shorting. Based on R&R, that would be a good shorting entry. Okay? If you're going to short at the most critical resistant levels, you can do that. And that, to me, is where the most critical resistant level is at, based on Fibonacci rules, based on condition 5. Okay, so bull market is not back just yet, but like always, I will be trading this like a sheep. I don't care if the bull market is back. I don't care if the bear market continues. I don't care if we stay in a consolidation market. I'm looking for the setups, and I have a target. I have a risk management, and that's all that matters. Just a plan, and we just trade it. Okay, so remember. So I hope you guys got something out of this, okay, for whatever it's worth. I'm not making any predictions. I'm just sharing with you guys, my information that I've studied and found over the years. And those are the 5 conditions that need to be met in order for a bull market to be back. As of right now, the bull market is still not back because the 5th condition has not been met. Tomorrow, look to short below 417.5 or look to long above 420. Let's keep it simple. Triple Q still basing around my multi-year trend line. If I zoom out, the purple trend line, you can see it start from all-time high, and then the test on December 28th high, and we've been basing around there. Overall, it's not bearish. Okay, we had a strong move up, you know, it's basing the build strength. Now, the breakout level was 337.5. Triple Q managed to close at 337.64. That's a very weak breakout. I barely want to call that a breakout, but keep in mind this trend line does continue to slope down. Breakout level is now 337. So if Triple Q could stay above 337 tomorrow, 339, 340.5, and 342 are my targets. Okay, if you want to get bearish, short the breakdown of 335.5. We didn't even test that today, but that's a support that I'll be watching. That's when I would look to short. Otherwise, I don't want to short the top because the market could keep on chopping. I don't know if it's going to chop or reverse. The market keep on chopping. Imagine shorting and the market just chops. Theta is going to kill your contract. That's why I'd rather enter when there's strength. I would rather enter shorts below 335.5 if it breaks down. But as of right now, it's trying to break out. 339 is the next target if it can stay above 337 tomorrow. IWM trying to recover from last Friday's selling. Okay, that 179.6, that's 38.2 fib level. That is still in play as long as it can stay above 177.5 tomorrow. Okay, above 179.6 would be bullish, and we could fill that gap at 181.5ish. Okay, short below 177.5 tomorrow, with 175 back in play. Below 175, I would be bear bias on the IWM. Beautiful trade on Tesla today, guys. Beautiful trade. I had this nice trade. You know, SPY was chopping terribly, but Tesla treated me very well. As long as above the 50-day daily moving average, look to long. If the 480 gap fill clears, okay? So I was looking along above 180. We got this nice pump going as high as 189.32. Holy moly, hopefully you guys caught the trade. All right, now I got from a January low to a February 16 high. Okay, I got Fibonacci levels. We got that 23.6 fib level at 190.3. That's a very critical resistance tomorrow. Bears need to step up there and break down support starting with 184. All right, we break down back below 184 tomorrow. Definitely look to short with 180.5, 177 and 177 to 176 zone, with 174 below that, okay? But if 190.3 clears and this rally continues, it might touch the top of this bull flag that I got here. And the resistance of the bull flag is at 196. Bears definitely need to step up at 196. Maybe we'll get some basing, I don't know. But remember, you trust rejection from resistance when it breaks down support. So if we was to clear 190.3, test 196 and reject from there, I would look to short below 190.3. Play that false breakout setup. All right, so same principle with this 184 level. Okay, that was a gap fill. We had a couple of gaps. 184.5 actually was the gap fill. So if we break back below, look to short. That's a false breakout setup. Right here, Apple is struggling and basing around that 174 level, okay? So above 174, 176, and 178.5 is in play. Below 174, I would be short-term bearish and favor 171 being tested. Now, 171 is the orange trend line. Below that is bear bias time. Look to short. Bears taking control because this trend line been keeping Apple up all year, and bears need to break it down. Otherwise, stay bullish as long as above that trend line. All right, DXY is basing. It's basing, consolidating. Is it going to keep going up or going down? Support is at 102.9. Resistance is at 103.6. That's the chop zone, 102.9 to 103.6. If it clears either side, that's the direction it's going. So above 103.6, bullish, with 104.1 in play. Below 102.9, that's bearish. I'll favor 102.2, 101, and 100.8 back in play. Okay, here is the VIX. Well, it's bouncing off that 5 daily moving average, but still getting selling pressure from that 18.3 zone. It actually went as high as 18.13 today. Didn't quite hit that level, but as usual, can't get bullish unless it's above 18.3 at least. Otherwise, it's just chopping. There is support at the 5 daily moving average at 17. Below 17 would be bearish for the VIX. Okay, guys? And here's the dark pool. We got a lot of activity at 418.65, but only 900 million. Didn't quite hit the billion, but definitely watch that level for 18.65. These are institutions secretly moving there's, you know, their stocks and their money, okay, and they don't want us to know about it, but we don't know what they're doing. They're hiding their intentions, guys. They're hiding their intentions. But let me tell you, last Friday, or was it last Saturday's dark pool order, we had 5 billion around that 419 level. We had 2 billion around that 420s level. And remember, today, that's around where we had a lot of selling pressure. A lot of selling pressure. So there's a lot of sell orders there. Could that have been the institution? Could be, guys, which wouldn't be quite bullish. But let's see tomorrow. Let's see tomorrow what happens. Stay reactive. Stay sheeps. Let me finish this. Option flows. I'm getting distracted. Sometimes I get a little too passionate about this sheep stuff. You know, I just start rambling off. But anyway, 49,000 contracts onto the put side compared to 22,000 contracts to the call side. Sweep orders here, interesting. 417 strike price, pretty it's in the money one. May 23rd. Okay, these must have been like day trades, maybe a swing trade for tomorrow, but they're bet into the upside. Came in 352 end of the day. That's interesting. There's some context to that. However, look at this put. Came in at 1:58 p.m. Over 30,000 in size, 3.8 million in premium, 390 strike price for June 16. Holy moly, guys! Somebody is very bearish on the SPY heading into tomorrow, and this is a bigger bet than the call. So, for what it's worth, bearish. QQQ 74% in the calls. We do not, guys. Keep in mind, we don't see this too often where the flow is bullish, but today the flow is bullish. There's one block order, institution order, over 7,000 in size, 340 strike price for May 26. Not that far out, a couple days away. Short-term stuff, okay? Bullish. Interesting. Getting mixed reviews here between SPY and QQQ IWM is bearish. Holy moly. Look at them sweep orders coming in with those big sizes. 170 strike price. This one 165 strike price. So big money's overall bearish on IWM. We are getting some calls coming in, some decent respectable sizes, but overall it's much more puts than calls. Tesla 49% in the puts, 51% in the calls. That's very mixed, guys. Very mixed. As far as the calls are, they're coming from sweep orders. And as far as the puts, they are very in the money puts from block orders. So our institutions hedging again. That's what I wonder. It looked like it maybe. Apple 50%, 50-50. Holy moly. But the one that does have a big size is a call for 75 strike price. Okay, but 50-50. Smack dab in the middle. Here's the VIX 100% in calls. Again, all these calls, they're mostly split orders. All these calls, but the VIX ain't doing nothing. Somebody poke it with a stick. Anyways, guys, I'm doing the $500 giveaway in a couple of days. Be sure to comment below to enter the win. The more you comment, the more I enter your name into this wheel and increases your chance of winning. Okay, I know we're chopping, but hopefully, fingers crossed, we get some tradable moves tomorrow. Other than that, have a great day. Peace.